Welcome to TradeTheMBI.com. This is John's Reporters for the 29th, and well, there you have it. We started off fairly decent. We had the cyan below red, and literally intraday turned into a daily move as we ended up with the immediate spider of steel and cyan starting to rise. We already knew we were overbought. There was no question about that moving into it, but then it finalized with the DOC spread going above. We always talked about simple ABM value right up there at the 53 range. Easy enough to see where those lines were, and we saw it intraday. We put it up on the Skype chat there, so it was easy to see. NASDAQ relatively a little bit better off than the Dow was at that. ES was at that point, the S&P. So reading-wise, was always a little bit less bullish, if that's the easiest way to describe it. I think the Dow was so far above itself, still not bad from the reading standpoint, however, filling in some of these positive extremes. And we were talking about the positive extremes on the 5K chart, and it was going back quite a ways. So very healthy backfill from end of year. And we expected this rotation to take place at this time. So there was no question about that. We saw the beginnings of this decline take place intraday as the euro started to just really take a sudden downturn intraday chart that I was showing, and it precipitated the losses in the market. And then, of course, now we've had the full buyback of that exact loss. Not a surprise. However, you're not getting a corresponding ES move, which is always interesting. So a little safety back into bonds. And again, this becomes an interesting one going down because how many banks in that are going to be world are hurt with the amount of treasuries they own given rising rates? It's always interesting how they're behind the curve on everything. And USO still at the peaks. So no issues with what oil's doing, and it's actually an indication of expectation for some robust consumption of petro. Whether inventories will support it or not, that's a different issue, and whether they're just going to overlook that, we'll see what that does, and whether there's a lot of discounting going on outside of the regular price structure, which has taken place. And gold starting to eke its way back up, just a little bit of recovery, just a little bit at a time. Still a good long term. Here's that 5K chart, and that just shows started up with a nice move the other day. Got all positive extreme, and then by the end of the day, they had refloated most of those all the way going back down to here. And then we ended up with a nice little DOC spread, and the orange got caught right in between. And as long as the orange was stuck in that range, we expected continuation. Made a little pop down here below, but we weren't below the 7.5. By the time we did get to the 7.5, we were already in a downward continuation. We had dropped back below the 13.5 on the red DOC and started another wave, and that's exactly where things now. We started to support and rise, and actually there's been a decent amount of buying within this base here, so this could be the beginnings of what that bottom is. We'll have to see. We should have been already above zero, though, and that should take all the way to the short algo. I mean, this is quite a range between the two, so there's still some more work to be done as far as that goes. Not overly thrilled with looking at that ES right there, but here's what the euro, and it was this range right here, and all of a sudden it just started to cascade, and that's exactly what corresponded to most of this decline right here in the 5K. So it was nice to see that correlation develop again, because it does have an impact on S&P earnings going forward. So that's something to keep in mind, which is why we look at that, which is why we also look at the oil and bonds as well, just to make sure that we've got a complete grasp as to where the overall broader economy and early signs of stability and or lack thereof. So it gives us a pretty clear idea. I know a lot of people don't do that, but you don't have to get too ridiculous with it. I think those really covered the basics of particularly how the S&P's molded and where its profits come from, and that's an important one. Now the Dow is going to be a little bit outside that because of the talk of domestic spending for infrastructure, and being that it's all utilities, that certainly would have an impact there. So that's why that plays a little bit differently. As always, though, could you look for me on the Skype chat? I'll be having indicator updates ready and available for the new month, which is the new year, 2017. As always, though, trade well, and we'll talk to you later.